but about 77% of people here have at least had one dose.
All right. Well, hello, everybody. I was just chatting with my buddy Vince here. Let's go ahead and get started. Welcome. It's good to have you. And a good day in the market today, too. Vince and I are going to we're looking forward about talking about the market. So I'm going to read this little legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock should have no liability for any investment decision based on the use of the software, any trading strategies, or any information provided in connection with the company. And so I want to add just a little bit to that, because in these market recaps, we end up talking about a lot of stocks that we may have positions in, or that we might be interested in, or stuff that is on our watch list and we might want to buy. I want to reiterate, though, that we aren't recommending that you buy anything. We don't know how much money we've got. We don't know what your risk tolerances are, all of that kind of stuff. I wouldn't want you to buy something and lose your shirt for it or anything like that. If you are trading, you should trade with an amount you can lose, an amount you can afford to lose, and you should be aware that trading can be risky. Would you agree with that, Vince?
Yes, I would. Having been in this business for almost 35 years, yeah, I've experienced a bit of risk.
Yeah.
Yeah.
I'm going to intro you a little bit.
Sure.
Vince is a good friend of mine. We've been doing business for a number of years. He's designed several add-ons to Metastock, our software. And I just love having Vince. We just did a webinar with him about a week ago. I bring him into the recaps. I usually end up, I just love kind of listening to what he has to say about the market. He is one of the people that I really respect. And he also has some good ideas. So welcome, Vince. If you want to learn more about Vince, if you want to kind of get in touch with him, you can go to tradingwins.com. Is that the best place?
It is. And or send us an email at info@tradingwins.com.
Perfect. I can see your screen. It looks like we're going to start with the Dow Industrial Average.
Yeah, I just wanted to do a quick recap of the markets. Today was a very good day on the markets after that bit of a scare yesterday that didn't last long. We sold off in the futures early yesterday, sold off pretty hard and then came back. But today was a real nice bounce. The Dow finishing higher by about 470 points and is very close to the all-time high again. I mean, really, there's no resistance overhead, but the all-time high going back to May 10th here, 351, and we're at 348.85. So we're just about there. Real nice bounce. But the one point I wanted to share with everyone when we're looking at these index charts, and I'll look at the Dow, the S&P, the NASDAQ, the Russell. But the one point, there's a lot going on with the markets, and obviously a lot of headlines you can read every day. One week it's about inflation, and is it transitory or not? Is it going to become a problem? We heard a lot about bond yields. There was a big scare when bond yields were rising. Now this week, the big scare was bond yields dropping. There's so many things you can look at. But the one thing that will never steer you in the wrong direction is price action, because price action is actually what's happening. These are all, what you see on the chart is a reflection of all the orders that were actually placed and executed. So that will never change, and that is not an opinion. That is reality. That's what happened here. And so when we look at these charts and using basic technical analysis, what it tells us is that it's still a very bullish picture. If you look at the Dow here, we have been kind of quiet over the last couple months, going sideways, but we're pretty close to breaking out to a new all-time high. And obviously no resistance overhead. But if we broaden the scope a little and look at the weekly chart, boy, oh boy, this starts to look really good. Yes, we've reached a point here where, when price gets there, we see some selling and it comes back. But look at that slope on the 20-period moving average here, which is what I use to judge momentum. And just, if you don't want to use that, just look at the lows, the prior pivot lows, consistently making higher pivot lows. So I think it's just a matter of time before we break through there and continue the run. If you look at the monthly chart, it's the same thing. I mean, it's nothing but a straight line up. So not only is there a clean trend that's still fully intact, but there's lots of momentum behind this move. If you look at the candles here, and these are open, high, low, close bars, but whether you're using candlesticks or not, or any other type of bar, what catches my attention here is that, we just continuously making higher highs on these candles. Now we take a break for a couple of months, and I think it's about time that we bust through again. And it's the same pretty much across the board. If we look at the S&P 500, right? Here's the daily chart, and we broke out to a new high today, a brand new high. We actually have a new long re-entry signal here, but look at the weekly. Right? It doesn't get any better than that. And not only that, pretty much every week we're closing out at the high of the week if you look at these bars. So it is a very strong trend. You look at the monthly chart, and again, it doesn't get any cleaner than that. So, there may be talk of inflation, there may be talk of other points of concern out there, but it has yet to be reflected in the charts. I really don't see any panic in the charts at all in price action. Look at the NASDAQ. And today, many of those big tech stocks did very well. I mean, have a look at Google, a PayPal, a Facebook, all of those doing quite well today. And again, very strong trends intact. Lots of momentum behind that move. Sorry.
That's Kelly and his microphone's on. I'm just going to go ahead and turn that off.
Muted.
Not a problem.
Go ahead.
I just wanted to show one more. The Russell 2000 here, is really the one index, and this is more the small caps that have been consolidating sideways and are still very much in that range. So here, the only real thing to do is to box that channel and wait for a break, either above the highs or the lows. And so we're not quite sure which way this is going to go just yet. Judging by, the other three index charts, we assume it'll break the highs. And if it does, this is set up perfectly from a technical perspective because, generally, as a technician, what you want to do is measure the length of the channel from the start until the point of breakout. So assuming it breaks out here, let's say next week, that length that we measure here is the type of move you should see in the direction of the break. So if it breaks to the upside, you should see, what is it, about 6 months of upside, which actually, if you look at the length of this line, matches up almost perfectly with the prior run. And, of course, if we break below the low here, then it sets up for a very, perfect move back down to the next real level of support down here. So either way, we're in for a sizable move one way or the other. And it's fairly easy, or it will be fairly easy to identify. But right now, the overall markets are very strong. Crude oil, some of the commodities as well. If you look at crude oil, it's trending quite well. We have a new entry here today. I think this move will continue here. So it looks pretty good. And you look at the weekly chart, and it's been a very strong move. And if I mark where we're at today, here's the closing price, 74.67. If you look to your left, we're just about to break above that high. The important thing to note on this chart is that all of this activity here, which would normally act as resistance on the way up, all of that's been cleared, right? That's now below that line. So it has a pretty easy path ahead, I believe. So that's another market to look at. Gold, if you look at gold, it was doing quite well and then had this sell-off now is trying to regain steam. So we do have an entry here, although it's not an entry I would take for the simple reason that the slope on the 20, or what we use as momentum, is against us here on the daily chart. So, but it does indicate the potential for a continuation of this move higher. And you look at the weekly and it's flat. So there really is no trend there. So gold is, on hold for now. But crude oil and certainly equities are looking really good right now.
Cool. Should we look at a couple charts?
Absolutely. Sure.
So I thought this would be a little bit fun to do. Today I ran a scan of the S&P 500 with the Victory.
Mm-hmm.
I bought a few of them, but I was thinking maybe we could look at, let's look at DRI. If I can read my handwriting.
Darden Restaurants, sure.
Don't know anything about this business. It came up in the scan. I assume they're restaurateurs would be my guess, but in any case.
Yeah, they own the chain, but a lot of times, I don't have any idea what a particular company I'm trading even does, let alone how they do financially and so on. I strictly focus on the chart myself. And when I look at Darden Restaurants here, we had a real nice trend going. We pulled back slightly, and now we're setting up to break out above these highs again. So if you look at this, once price had moved below the 20, it was a point of concern, but moving back above is one positive, but coming back to retest that 20 successfully and gaining slope on it is a much bigger positive. And when we look to our left, if there isn't much in the way of resistance to overcome, then that's exactly the kind of trade you want to take. So let's go to the higher time frame and confirm that there's nothing else up there. So if you look at the weekly and where we are now, you look to the left and it's just clear space. And that's really what we want to see. If you look at the monthly, same thing. So we are pretty much at the all-time high. And that's a beautiful thing when you're long. Not only is there no resistance, but when a stock moves to an all-time high, it tends to overshoot. So at some point, will the breakout fail? Yes, it will, and you'll get stopped out. But usually 8-9 times out of 10, that's a very good trade to take. So this is a nice looking chart. I should just quickly mention, for those of you who may be seeing this layout for the first time, this is what we call our Victory system. And basically, it identifies or helps you identify strong trending markets and gives you points of entry. So the arrows are your original entries, long or short, and these dots are re-entries. In other words, if we're already in a trade, but the system identifies the same components that came together here to call the trade are coming together again, it will mark that on the chart so that you can either add to your existing trade, or if you missed the original entry, you can now jump on and take advantage of it. I just want to be clear that when you're looking at this, the intent here is not to take every single trade. You want to trade the ones that have trend and momentum. So it's that slope on this blue line, which is the 20-period simple moving average, that you want to focus heavily on. So any entry along the 20 that is sloping in the direction of the trade is what you want to see. You do not want to take, for example, this short or this short where momentum is higher and you're trying to trade lower. You don't want to fight the market on that, okay? But yeah, let's look at a few more.
I had a question on this one real quick because I was very curious about it. On this one, it's actually one that I put on my watch list, but I decided not to buy it.
Okay.
But for you personally, would you wait until the high was reached from a few days ago, or would you go ahead and buy it right away?
So because we have slope on the 20-year, I'd probably go ahead and buy it right away. If we didn't have slope, if say we were more like the Dow Jones is now, where it's kind of flat, and we don't have a lot of slope on the 20, but it looks like it's going to punch through the all-time high. What I would do is wait for it to pop above that high, and when that happens, I would take a half of my normal size, a half position, and the reason being is, a lot of breakouts fail, right? They're head fake. So if that were to happen, and I only took a half size, with a tight stop, you'd end up taking a very small loss. But generally also what happens with a breakout like that out of a consolidation is that it tends to move up a little and then come back to retest that level. So if that happens, that's where I would put the second half of the position on. Once it pulled back to retest that high, and bounced off it, that's where I'd take the other half of the trade. In this instance here, we actually have slope. So it tells me there's a greater chance, a much better chance that it will break through than we would have during, a flat 20. So here, yeah, I would take this position.
All right, cool. I was curious about that. As I was going through there, I was like, sometimes what I do when I'm trading Vince is I go, what would Vince do? Let's go. Let's take a look at TRMB. This also came up on a scan today.
TRMB, Trimble.
Mm-hmm.
Yeah, it's another nice looking chart. I mean, obviously, if you look from the, your bottom left to your top right, you're obviously headed in the right direction, right? You have a real nice trend going. We are on the right side of the 20, which you always want to be on. And, we've come back, we pulled back yesterday and bounced right off it, which is great, which means it held support. Now, if you take a closer look at this, the moving average will always act as either support or resistance to a certain extent. But if you look to your left and you find, a series of high pivots like that, so that's an area of support in addition to the moving average. And it came into support and bounced right out of it. And that's exactly what you want to see. So that's a sign of strength as well. And then, of course, you look overhead and you look to your left and ask yourself, what is there? So it's not completely in the clear. There's this high pivot, this high pivot. So at least two previous times, when prices reach that level, sellers have come in and pushed this lower, right? So it's something we have to be aware of. But if we look at the broader picture, look at the weekly, what do we see? Right? When you look at these highs, does it really look like there's going to be a lot of resistance there? It really does not, right? Especially when you look at the volume here, which was average at best, if not on the low side during those two pivots. But here, it's just the strength of the trend and the amount of momentum behind it that just, gives you confidence that even looking at the daily, this should punch through to new all-time highs. You look at the monthly, and it's moving. Now, when you look at a monthly chart and price is that far away from the 20 or farther, right? There's always the risk of a snapback. The farther it moves from the 20, the easier it can come back. But when you are at new all-time highs, there's no telling how far it can go. So that's not something I would worry about when we're breaking out to new all-time highs. And remember, you should put a stop here, right? Close by. I like to put it just below the most recent low. So really, from 83 to just below 80, I'm not really risking much. So I'm not going to worry about how far it is from the 20 on the monthly chart. But, the only way this chart could look any better is if the slope on the 20 was more like it was back here, right? The higher the degree of slope, the stronger the momentum behind that trade. I want you to think of it like wind at the back of these bars, just pushing them forward. But this looks great.
All right. Let's see. We have a request to look at Fubo, FUBO .K, I think. Yeah, that's right.
Popular symbol. Talked about it a lot in the chat groups. Was trending nicely, but it's recently come under a bit of pressure. Now, we're below the 20. So as long as we're below the 20, we're not going to consider a long position here. The question is, do we consider a short? Well, the 20 is flat. So I would not look at this as a short just yet. Let's have a look at the weekly or the monthly. And you can see that it doesn't show us anything, does it? It's completely flat. I mean, this thing has been consolidating since mid 2017. We're talking 4 years of nothing here. Now, recently we had a bit of action here, and you can see how the volume stands out, right? The volume will always give you an indication that, there's something going on. It won't tell you what it is, but it will let you know that something is going on. And if you look at the monthly, again, you can't even see this other than the volume. So what I would do with this chart, aside from nothing right now, putting it aside, I would wait just to see that if we take out this low here, right? So we came back, we bounced today. If we fail to get above the 20-period moving average and we drop back and we take this low out, at that point, you could feel comfortable taking a short for a move back down to 15, which is this level here. Aside from that, if we clear the 20 and we clear this high, then I would look for a trade higher. Okay, but just keeping it very, very simple, right? What you want to look for when you're using victory is that slope. So you want to wait for a slope one way or the other, and we just don't have that right now. So this is a hold right now.
All right. COST, Costco.
Oh, Costco has been doing well. And yeah, I mean, look at that move on Costco. Again, almost day over day, new high every day, and it's been going on for a while. And if we look at the weekly chart, this one it's just been very, very strong. We recently got a re-entry here when we moved above the high or into all-time high territory. Look at that. With slope, that's exactly what you want to look at. And so for the last 3 weeks, we've been going straight up. That's a beautiful trade. Look at the monthly. And I mean, we're not even that far from the monthly. So this tells me that, being at an all-time high with such a strong trend, with all this momentum behind it, and not even being extended, what we would call extended, this tells me that this has a lot of room to move. So it looks great. So the only thing I would tell you here is when you get into a chart like this, as fantastic as it looks or as exciting as it is for the amount of profit potential that you might have here, you got to remember that anything can happen at any time. So you don't want to get, complacent with it. In other words, just because it looks so great, you don't want to get in and hold no matter what. You want to keep an eye on it. And as it moves further and further away from the 20, you want to, take some profits along the way, right? You want to scale out along the way. But as far as, great entries are concerned, fantastic entry here. This is another great example. If you look at these arrows here, right? It was all telling you that it was about to go higher, but were the first three ones that you really wanted to take, they really weren't. Why? Because the 20 was flat and we were not getting above a previous high. The difference on this one here is that, 20 was still fairly flat, but when we broke the high of this bar, we broke above all of these highs. We broke out into all-time high territory. So that is a channel breakout, and that is what you want to jump on. So going back to my earlier response, I would put on a half position here because I don't have the slope that I'm looking for, right? And in this case, it did not retrace to retest that line. But does it really matter? Not much, because even that half position doing really, really well, right? You're still making good money there.
All right. Let's see. Roku. ROKU.
Yeah.
I haven't looked at this one for a little bit.
Yeah, actually, Roku is about to set up. So we don't have an entry yet, but I would imagine one appears anytime now. Could be as early as Monday. The other thing I like about this is if you're into chart patterns, this is, not a technically perfect cup and handle, but it's almost there. So you get this rounded cup, and now you pull back to form, the handle. Think of it like a mug. There's your cup, and then this is the handle portion. Whenever you get a cup and handle, there's a couple different ways. There's an aggressive entry and there's a conservative entry. The aggressive entry is to draw a trend line along the highs of the pullback. And if it pops above that trend line, that's your aggressive entry, your early entry. The conservative entry is to wait until you actually clear that high, right? That's a little safer. But if we were to get a re-entry dot, a green dot here on Monday or Tuesday with this kind of slope, I would enter that trade. You look to your left and there's really no resistance. You look at the weekly chart, right? And it proves that, or confirms that we are near all-time high. So getting above there would be fairly easy. So again, this is not there yet, but I would look for a re-entry any day now.
Right. We do have a comment from YouTube. Mr. Dev says Costco is extended. By many non-discretionary measures, it's extended. And I think really what you're trying to point out there is if we looked at the other stock where it had been going up for a while and you compared it to where its monthly 20-period moving average was, it was way down here and the price was way up here. With Costco, they were right in touch with each other. So you could make arguments that it's extended, but the measurement that he was using, we were not extended on a monthly basis on Costco. If right. You compare it to where the moving average is.
Yeah. So there's many different ways to, I guess, come up with a valuation for a stock. And, if you're a fundamental trader, you're going to look at financials, you're going to look at all sorts of ratios and come up with a value for the stock and compared to the current market value, it'll tell you if it's undervalued or overvalued, etc. There's a lot of different ways to look at it. And here's my simple view on this, okay? To me, I don't care why something is happening. I never ask why. I just need to know what is happening. And when it comes down to technical analysis or taking a trade, to me, it's like economics. It's simple supply and demand, right? So if there's more demand for a stock than there is supply, in other words, more people willing to buy than sell, it's going to go higher, regardless of what's happening around the world, regardless of whether the financials tell you that at 412 it's overvalued or undervalued. If there's more buyers for it, it's going to go up, right? And if there are more sellers, it's going to go down. So that's what price action does. I mean, think of it this way. At least this is the way I think of it. Okay. Apple. Let's look at Apple. So I think we can all agree that Apple makes money hand over fist, right? Great business. They continue to bring in money every single day. They have more cash on hand than they know what to do with. They can actually buy by countries. The cash on hand they have is more than the GDP of many countries out there. That's how solid they are financially. So if the stock price was a perfect reflection on the company of what the company is like financially, right? We should never, ever see Apple move lower, ever. From when it went public to now, Apple should just be one bar higher than the other forever, because that's how their business has gone. But the point I'm trying to make is that the actual share price, the current share price, is not a reflection of what the company is doing today. It's a reflection of the expectation that people have for that stock. So right now, it's going higher because there are a lot more buyers than sellers. Because people think this is going to be worth more, next week, next month, years from now than it is today. And that's why there's buying. Down here, there were more sellers than buyers. So, I'll never argue with anyone whether something is overvalued or undervalued, because I don't do those ratios. I don't even try to do that. Mm-hmm. And believe it or not, when I started my career, I started out with fundamentals. I did. I used to spend hours and hours pouring through financials. Okay. But Jeff, if we have a second, I don't know,
Yeah.
Most people here wouldn't know the story.
Absolutely.
How I got started. But here's my story, my experience with fundamental analysis. So, and I was in the industry, and I was poring over financial reports, and I thought I understood it well, and could do very well with it. So there was this one company, won't say the name, but it was an oil company, and I started buying it because everything I read up on it, everything I saw in the financials, looked fantastic. So I kept buying the stock, and it just kept going up, and I bought more, and it kept going up. And I loaded up a very sizable 6-figure position on this stock. Now, at the time, I was a little, I was making a lot of money. I was overconfident, we'll say, for lack of a better word. Wasn't really being smart about how I managed my positions. And that one position was a big part of my account. And one day, I turn on my laptop first thing in the morning before market open, and I see a headline come across for that symbol. And it said that the CEO and the CFO had been arrested for falsifying the books. Okay. Now, all the financial reports I read were audited by very reputable accounting firms, right? So I could only assume they were legit, right? But now I know why they look so good. They were all made up. So at the time, that stock, which I had started accumulating at a dollar and change, was trading at 14.5. That's how much money I had made on it. It was trading at 14.5. It was halted before the market opened. When it did open a few hours later, it opened at 25 cents a share. So that was my real expensive lesson with fundamental analysis. And from that day on, I never looked at financial reports anymore because I just couldn't trust them. And that's when I started studying technical analysis, and that's how I got to where I am today. But trust price. Price is everything.
Okay, good. That's good. Would you say that that's kind of made you become a much more risk-averse trader?
Oh, I absolutely.
How has that fundamentally changed? Or do you find you take smaller positions, or use stops, or?
Yeah, you know what? And I'll be honest with you. It affected me so much at the time. That was such a big blow to me financially that it took me from a very comfortable position to a very uncomfortable position. And it took me a while to bounce back. And it left a scar. So when it came to trading, had a real issue pulling the trigger on a trade. From that point on, whenever I got in front of my screen and tried to click that buy button, it was very, very difficult. I was so afraid of taking another loss. And I'll be honest, I actually, went and sought professional help for it because I wanted to get over that. I knew I could do this, but that was really holding me back. And one of the things that, I came to realize with that is that scar will never leave. That scar is there and it will always be there. So every single time I sit down to trade, I have the same feeling, but what I've learned to do and what you need to do if you're in that same situation is tell yourself that you understand why you're feeling that way, right? There's a reason why that instance that happened, that loss. So it's perfectly okay and perfectly normal to feel that way. But if you have the proper plan and you're trading in the proper way, meaning you're protected, right? You buy the right amount that you can afford to buy. You put that stop loss, you set those parameters in place, you can no longer take a big loss like that. And so that's how I've progressed to this point, is with the rules that I wrap around my trading, it's impossible. It's absolutely impossible for me to ever take that size of a loss again. It simply won't happen because I won't allow it to with the rules that I use to wrap around my trading. And that's how I continue to trade. So, and as you build your account, yeah, the numbers get bigger, but to you, it feels the same. So I'm still trading with an amount that feels insignificant to me, even though it would be sizable for many other people, right?
Sometimes the market's lessons are the most expensive.
Exactly. I mean, but they shape you, right? Those lessons are what shape you. So don't let it, pull you away from trading. Just learn from them and move on. You'll be a much better trader as you come out of it.
Okay. Let's see. I don't see a lot of other comments. Let's take a look at one I picked up today, and you can see if you like it too. T-Row.
T-Row Price, yeah, TROW. I mean, that's a fantastic looking chart. Look at that. I mean, so there's a couple of things that you can look at. First of all, when you see a chart that's just back and forth, right? That tells you that there's something wrong there. It's just too volatile. What you want to see are steady moves, nice and smooth, right? So, whether we bring up in more data for this or not, it is very smooth in the way it trades. The other thing is that if you look at the bars, they're all very similar in size, right? And that's, again, really steady. And that's exactly what you want to see. Then you have a nice steady trend. It's obvious, right? When you look at this chart, there's no other way to look at it other than an uptrend, right? There's no way anyone could interpret this in any other way. It's that clean. So that's exactly what you want to focus on. And you look at the slope on the 20, and it's a very significant slope. You look at the weekly chart, and again, very, very clean, so predictable, right? Which is beautiful. You look at the monthly, and it's exactly the same. And it's at an all-time high. You look to your left, there is nothing but blank space, which is exactly what you want to see. So this trade entry here is a great one. I think you made a great decision to buy in here. We just moved off to a new all-time high. And I'd be shocked if you didn't make money on this trade. This looks really good.
Well, if I don't, I will sell it before I lose the whole position, right?
and that's the thing, right? You should never, the focus should be on the setup, not how much money you can make or how much you can lose. The focus should be on the setup. Are you looking at the right things, right? And are you pulling the trigger at the right time? That's the only thing you should focus on. The rest, with your rules, should fall into place. So no matter how good it looks, you should have a stop loss here, using your your fib projection tools, you can identify overhead targets and go from there. But don't get caught up in the dollar signs. Focus on the execution. And once you get good at that, it just becomes a matter of rinsing and repeating.
Before you were talking about moving your stops at the lows. And so would you typically what I look for, and I just want your advice on this, typically what I look for is a low that's surrounded by two higher lows. So that would be basically, if you're looking at this chart, yesterday's low. Is that kind of along the lines of what you would look for in terms of a stop loss there? Yeah.
So whenever we get a higher low that's still above the 20, it's great if my entry was originally here, for example, my original stop would be here, just below, and it's hard to see because of the symbols, but that red candle right there, just below the low.
Okay.
And
we see it.
Yeah, and now as it progresses and it pulls back and it creates a new pivot low. Once it clears that previous high, which it did today, so for Monday morning, I'd be moving my stop to just below this low, right? And that's the way I would follow it along. Now, as you know, Jeff, because I mean, it's something you and your team created with the expert commentary here. With every candle that it moves ahead, it gives you another price for you to trail your stop on, right? So that's a great feature. But if you want to, give it a little more room to move, then trail it from one pivot to the other, right? So if it continues and pulls back again, creates another higher low, I would then move my stop from here to there.
Awesome.
Yeah.
Okay. I don't see many more questions coming through. Vince, that was great. I really appreciate everything you do, the time you spend with us, the great products you've designed with us, all that kind of stuff. Any big plans for this weekend?
Hopefully, weather permitting, just a nice pool and a nice barbecue and some time by the pool with the family. That's all. Nice quiet weekend. Yeah.
That sounds like my weekend.
Excellent.
Right.
Thanks again, Jeff, for having me on. Appreciate it.
Thanks, Vince. Have a good weekend. Thank you for everybody for coming. It was good to have you here. I hope you enjoyed it, and I hope that we see you at the next one. Thanks, guys.